Let's talk about this gold trade real quick. Last week before the pre-market, before the market opened on Monday, on Sunday, gold has just something. I don't know exactly what happened. I still haven't dove into it, but I just want to recap the trade I was in. Um, this there was trading in this range here. So this is a 30-minute chart. The spot gold. So 2034 was a low, and then 2049 was the recent high of this range here. Let me just highlight it for you guys. 10-point range about, 10-point range. And I got an entry to get in about 2049. I was a little bit late because I wasn't near the charts on my phone. Um, but I was able to get a fill at 2058. And I want to dive into this particular market because I broke one of my rules. I was out and about while trading this market or having this position. Um, but I did good. Those are the times where you notice that the market is moving. It doesn't care where you're at, right? But if you have a plan, so my plan was to get into this market to buy the breakout long, and I did not know that it was going to run up like this. I thought gold usually runs the way it has a certain speed as far as price action. It doesn't make these type of moves daily. So I put in my stop. I think I gave it 10 points, 7 to 10 points. So I set it, and then I checked it 1 hour later, and I noticed that it was moving nicely in profit. I'm like, okay. And then we're going ahead and doing our errands on Sunday, and all of a sudden it just popped. Once it broke this candle open up at 1 p.m. on Sunday, Hawaii Standard Time, 2071, it just pumped all the way up, and I was holding a nice open profit. And I was like, okay, my stop was still down here. Now I'm thinking of, okay, what is gonna be my stop? Where did I trail my stop? So 30-minute ATR here was about 5.1, right? So I'll use multiples of that. Say I do 10, 2 times ATR, so that'll be 10 points. So at this point, I would trail it 10 points. So I trailed it 2 ATR, so that would be 10 points. And price was just moving up, and I was holding it all the way and up until, all the way into its new highs. Like, it was making new all-time highs here. Once it broke that 2100, I was like, whoa, right? It was just holding, going. So on the hour chart, the ATR on this particular candle was about 8.7. So I went 2 multiples, so $16, and I was just trailing it up. I was just trailing my stops, 2058. A few things you want to consider when trading these runaway markets or price action just starts to just go crazy. For the things I learned over time, you got to give the market room to breathe, and you have to be somewhat systematic about it. I personally use the ATR indicator because it measures volatility. It measures the most depending on how you have your ATR set up. It could be the last 14 bars or the last 21 bars. There's no magic number. If you just have to pick one and stick with it. So I use ATR, a 14-day ATR or 14 bar, and it gave me at this moment about almost a 8 ATR. So average true range of the particular candle. So one way to use ATR is using multiples. So if I go 2 times the ATR, that'll be a total of 16 points, and I'm just going to trail 16 points from the candle that's making the all-time high. So wherever's price, so say price was at 2100, my trailing stop would be 16 points below, so that would be 84. Okay, so I'd be down here with my stop. Let me just show you for illustration. So 84, of course, and then it peaked up at 121. So from there, I was like, okay, 2100 is my stop, right? So that's where my stop here. So with these runaway markets comes volatility. So therefore, if you're trailing it really tight, and if that's your system, then that's really good, fine, But I try to capture the bigger move. And of course, I'm not gonna exit at the very top. I know that. I'm gonna capture the middle, the meat, and that's my trade. So my final trailing stop was 2100. We peaked at 2122, and it came right back down the following hour, and price took me out. And so that was a let's see, good at math here. 42 point um capture as far as profit. And then according to this tool is a 4.6 risk to reward return, which is solid for me. I'll take that any day. But yeah, like you just gotta be calm when these markets are running away. The excitement, of course, I was a little bit excited, I will admit, because we're out and about and whatnot. But the main thing is that I stuck to my rules. I didn't let the open profit get to my head. I didn't let the possibility of, oh, coulda, woulda, shoulda, right? I have a system. I followed by it, trailed my stop to where it needs to be, and I took what the market gave me. And so this was a good trade for me. And usually these kind of moves will happen over a longer period of time, but for some reason, gold just popped up within the short a few hours. And so I was able to capture that move. And, you know, that's just something you got to be prepared. You don't know which market's going to pop. You put on your trade, you have your system, you know where you're going to get out before you enter your trade. You know what you're willing to lose, right? And you know where you're going to exit or trail your stop when price goes on like this. You know, this is the same way I trade it all the time. I use price. This is the same way I trade it all the time. You have your system, you have your rules, you just follow it. You want to get to a point where it becomes almost second nature. You don't really question. You're just like, okay, what is the numbers telling me? What's the price telling me? Okay, what is the ATR telling me? Okay, this is what I'm gonna do. That's it. Purely responsive. You're reacting without emotion. You are systematic about it, and you just take what the market gives you. And this was a good market, good trade for me coming into this December, the last month of trading. Now, if you could look at the price action, we have from the high of 21.22, we have dropped, let's see, over 100 points and currently trading at 2004. So it was a good run. Of course, I did not become bearish. I did not take that bearish move back down. Of course, that would have been a bigger, nicer move, but it's good. That's not my plan. I didn't have any type of entry to get into this bearish trend right here. So that's what I wanted to recap and just share with you on how to trade these markets that start running away from the breaking out of the range. And so hopefully you guys found that valuable.